All right, welcome everybody to the weekly review. I'm going to be covering over the trades that I took last week. Then we'll go in a bit talking about what my expectations are for the next week, like always. And then at the end, we'll do any questions you guys may have. Feel free to send them in the chat here. All right, so getting right into it. So I took one trade last week. It was a win on gold. Let me go here. Okay, so again, exactly, and I want you guys to see this, right? This trade that I took on gold was exactly what I planned last week and last Sunday, right? So I had a plan, I had my bias, I had my key level, I had everything planned out, and I executed. Okay, it's important to note that because that's how all of your trades should look, right? You should have a plan, you should have a level, execute the level. Okay, but the trade was this daily gap here. Okay, now part of why I chose this daily gap, and I want to show you guys this in particular, is a lot of you guys have questions on why do you pick this key level over this key level, right? A bunch of, and to be fair, valid questions, right? Now, when I'm picking specific key levels, okay, at the end of the day, key levels are discretionary, right? If I send all you guys a chart, all you guys can mark it up separately and differently, right? So how can we create something that's discretionary? How can we make it higher probability? Well, we use other factors that can play into that discretion, right? For an example, okay, if we look at a correlated asset of gold, which is silver, okay, if we go to silver, okay, and we go to a weekly chart, what key levels on silver do we have? Someone tell me. What's the obvious key level on a weekly chart that we have? FVG and breaker, right? And last week I was looking at this breaker because we closed above. Okay, so if silver is in a breaker and we reject this breaker on Monday, do I want silver to come down to this gap or any lower than here? No, right? So if I don't expect silver to deliver lower, am I going to expect gold to deliver lower if they're correlated? No, right? And again, this is how you can use intermarket analysis to use, again, at the end of the day, it's probabilities, right? If I knew exactly what key level we were going to use every time, I would be on an island somewhere drinking a margarita on a beach, right? But that's not how it works, right? We use probabilities. We say, okay, what is most likely to happen using the data that we have, right? So using the data that I don't believe silver should be in a retracement, gold is in a gap. This low is the same low on silver that was nested inside of the weekly breaker, right? So this S&T here looks high probability, right? And obviously I don't trade S&T, so I took the one that souped. Okay. Now, of course, like I told you guys, I did partial. Why would I partial? Because we're opening up a weekly gap here. Okay. If we are to retrace next week first, I don't want to be caught in this low. Okay. But I am still holding some if we do decide to expand. Okay. And of course, entry-wise, this daily gap was an hourly low. Below this hourly low, we have an intermediate term low right here, which this was used as my stop loss for this trade. Okay. Simply bought the low, partialed up here, around PM session open. So around here. All right. Any questions over this trade? Does this make sense to everyone? Bias, key level, entry. Exactly as we planned last weekend. A plus, exactly. This is what every single guy or every single trade you guys take should be like this. It should be planned. This is where I think price is going to go. These are the levels I think are going to take us there. Entry, right? That's the best way to think about it. You understand? Look, if I'm bullish, for me to trade a bias, I need a high time from key level, right? So if I think we're going to be bullish, for me to trade, just because you're bullish doesn't mean you can just trade, right? You have to get into this bullish price leg, right? So how do we get into bullish price legs? Well, we enter inside of high time key levels, right? Daily gap, stop run, entry. Okay. Now, going into Euro, okay. Now, again, that was my one trade of the week. I think I'm up close to 7R, something like that. Just for partials. So your A plus setup would be high time from key level validated by intermarket analysis, stop run SMT, and key level. Yep, exactly. How did you manage? I entered and I closed my laptop. And at the end of the day, I looked back, I took partials, and I put my stop loss in profit, just slightly. Though you said gold was for crazy people. Well, not always. Depends. When gold is in conditions like this, then I'm not touching it, right? But when it's clear, bullish trend, bullish level, that's when I want to execute. How to ensure stop loss inside key level. You mean how to know where to place it, Bips? Or what do you mean? Remember, it's in the, if you go to the WAP, there's a whole presentation on stop losses, right? But again, if I'm using a key level, I want to look to the left of the chart. What is below my key level that I can use? In this case, right, if I were to mark out this daily gap here, what's below this daily gap? This intermediate term low. Okay. But moving on, going into expectations for next week. Okay, we're going to start off with dollar and euro, and then we'll go into everything else. Okay. Now, for dollar, I see two things could happen. Okay, number one, I want to monitor this low, right? Again, when we're in a bearish market, you want to monitor each target one at a time, right? The same way that in bullish markets here, we want to market each target. If I go to a daily chart, right? Target hit. We close through, mean continuation. There was a weekly order block here, expand. Target hit, what do? We chop. Possible retracement. Key level, expand. Right? So you want to take each target one at a time. Okay, so same thing here. This is the first target, the first opposing liquidity pool I want to watch for. Okay, so I could see two different things, two different scenarios playing out. Right? It's possible, start of the week next week, we just dump. Okay, from this gap soup. Okay, now for me to actually trade this scenario, what do I need? I need a high time frame key level, and I need a stop run. Okay, so what high time frame key level could we use here? Well, we could possibly use a breaker, something like this. That's what I would likely be waiting for, would be a breaker or some sort of gap to be used here. Okay, now that's scenario one. Scenario two is that this low rejects and we have one more sweep like this. And if we have one more sweep like this, then I would expect euro, again, notice euro rejected this high as of now, right? I would expect euro to dip into this weekly gap one more time, if that is the case. Okay, so those are the two possible outcomes I see in current price action. Okay, of course, we'll see Sunday open, where we open up at, what key levels we have in play. Again, I'll keep you guys updated in speculation throughout the week, my thought process. But those are the two possibilities I'm looking at on dollar right now. Is either we drop from the start of the week, or if this low is to reject, then I'll look for a drop above this high inside this weekly gap towards this low. Okay, again, bias is the same. It's just dependent on how we travel to that bias, right? You don't trust the daily order block. Well, we rejected a low, right? This low was rejected. Same thing with euro. Look, euro rejected a high, right? So again, once we meet a target, you have to ask yourself, are we going to continue, or are we going to be in a retracement? Right? I need confirmation of that before I blindly just trade a key level. It could, right? But again, if we're in a retracement, where's the liquidity at? Where's the stops at? It's not up here. It's right here. And here, right? Always liquidity first. Okay. But that's the expectation for dollar. Okay. Let's go into, we'll go back to gold real quick. Gold is similar. Okay. I either expect gold to have a retap of this weekly gap here for a possible continuation, or this daily gap holds and we just expand off of next week. Okay. Again, two possibilities I'm watching for going into next week. Again, clear as day. How can we infer which one over the other? Well, you can just monitor lower time frame action, right? Do we start holding these key levels here? Do these key levels start getting ran, right? You don't have to know for certain. You can let price tell you and then take an entry. Okay. I don't think gold is going to retrace into this lower daily gap because of what I was just talking about on silver. Okay. Let's go to Bitcoin. Bitcoin is the exact same analysis I've had for over 2 weeks now, or 2 months, I mean. Not much to really talk about here. It's just consolidating. Again, I am short-term bullish, but until an actual drop below this low, there's nothing really to do on Bitcoin. Let's hit up NASDAQ. NASDAQ had a super clean setup this week, if you caught it. Again, this is very similar to Euro setup. We have a key level. We have the low that should be souped. A correlated asset soups this low, SMT, and we get an expansion. Right? So this was a clean setup this week on indices. I believe US 30 SMT'd it. Yep. So SMT'd it on Tuesday, which means on NASDAQ, yep, right here. So this could have been your entry on Tuesday. You ride the expansion and stay out of the range. And if you were to actually trade this, very clean internal soup here. This was also SMT'd, I believe. Then we also had some stop runs here. Overall, pretty clean week on NASDAQ. If you guys did catch this, good for you. All right. But any questions, or you guys want me to check any other assets? Does that all make sense? As always. Yeah, that's true. That's why I like to specialize, Jots. Is intermarket analysis the reason you don't tend to mention? I don't think you mention it as a part of your system in a lot of videos. Yes. When we're in a retracement, I look, okay, where can we retrace to? Premium discount levels, right? If we are in an expansion, we don't need to retrace, right? If price is doing this, like notice here, right? When in this price leg down, right, I would say bearishness is confirmed here. Where in this price leg down do we actually get a discount retracement? Okay, not here. We get one here. And then we don't get one here. Why is that? It's because we're trending. Right? The same reason why in this bullish trend here, there was not a singular time that we had a discount retracement. It was expansion, soup expansion, soup expansion. Right? Same thing with this downtrend. Outside of this, it was a soup expansion, soup expansion. Okay, when we're in trending markets, discount and premium doesn't matter, right? When we are, oh, it's frozen. You see it? Here, let me. Better? Okay, cool. For an example, here, I'll show this again. At this point, I would expect price to be bearish, right? This retracement here never reached a premium of this dealing range. This one did. This never reached a premium of this dealing range. Why is that? Right? Well, we're trending. Okay? In a trending market, price is just going to range, soup, expand, range, soup, expand. Right? The same way that, again, like in this bullish trend here, we expanded, range, expanded, range, expanded. There's no discount retracement here. Right? So I don't use it as in a sense of I require a key level discount premium, whatever, right? If I know that we're in some form of retracement phase, that's when I use it, right? But if we're just trending, then I'm just going to follow the trend. That makes sense? If we are not getting clean setups on Euro GBP, is there any pair you recommend or use? Look, here's how I think of it, right? If you trade EU, GU, and CHF, okay? All three of those pairs follow dollar, right? So if dollar is going to consolidate, do you think CHF is going to have any better setups than Euro or GBP, right? If dollar is going to expand, CHF is going to have the same setups as Euro and GBP, right? The more that you add multiple Forex assets, number one, you're just clouding your vision because you're just trying to focus on more things than you need to. And you're just doubling, like I told this to all the mentorship students all the time, right? When you add more, like let's say I were to trade CAD, CHF, and Euro all at the same time. I'm basically just tripling my risk on the same idea of dollar, right? That's why I say, again, specialize, right? Pick an asset. Maybe if you want to pick two, right? I personally like Euro, but I'll sometimes look at GBP, okay? But pick one or two and focus on them, right? Because again, if Euro and GBP are consolidating, chances are CHF is consolidating, right? Now, obviously, there's going to be small instances in where that's not true because they're not exactly the same, right? But for the most part, that'll stay true. If you're catching a high time for move on Thursday, Friday, under what circumstances would you hold and not hold through the weekends? Well, I trade for targets, Jen. So if I enter a swing, it's to swing to a target. Now, if I think my entry could be traded back to, I'll partial, which is hence the gold partial. But other than that, I trade for targets. I'm not afraid of getting broken even to enter again. What time do you wake up in order to trade London and New York? I wake up at 1 a.m., Brick. I go to bed really early, wake up really early. What are the lessons you have learned within the 3 years it took you to learn? Look, I'm gonna share some sauce with you guys. Okay, I want every single one of you to listen at this. Okay, there is two things that you need to get really good at to make money. Number one is your edge. Okay, if you don't have an edge, you can't make money, right? So understand what you're doing wrong. Understand what you need to fix. Feel free to ask questions. That's why we have this, the community. I'm here to answer your questions, right? I like when you guys ask questions because that means you're learning, okay? But number one, you have to have an edge, okay? Number two, you have to be able to trade that edge. This is where most people fuck up, okay? the ability, and I say this all the time, and you can ask any of the mentorship students, I've probably told them this hundreds of times, right? Your ability as a trader to make a plan, wait for that plan, and trade that plan, and then accept the win or the loss. If you can just do that consistently, repeatedly, even if your edge isn't the best, you're going to make money, right? Because you'll refine over time. It's really not that hard to be at least a break-even trader, okay? But where most people get wrong is they take one losing trade and then the emotional mistakes is what makes them a losing trader, right? Again, if you can consistently frame quality setups, wait for those setups, execute those setups, and then move on to the next setup regardless of the outcome, you're in a good spot, right? Excuse me. Yeah, of course, man. How do you go from getting 2 to 3 hour trades to 6 to 7 hour trades? Swinging. That's the power of swinging. My stop loss is a more intraday stop loss, but my targets are daily, weekly, monthly targets, right? So I'm able, right? One person, they trade every single day, lower win rate, 1 to 2 R, right? I rather trade less, high R, higher win rate, and I'm just patiently waiting. What's your advice for someone who wants to trade indices and forex at the same time? You can. There's people in this Discord that do. Okay. Me personally, I think of it like this, right? Could I make money trading indices? Yes. What do I feel more confident risking my money on, forex or indices? Forex. So if I feel more confident in forex, why would I risk my money anywhere else? Right? I'd rather, like I said, I'd rather just double my risk on a euro setup than take a euro setup in a setup on indices that I'm not as confident in. You look at euro JPY. Looks bullish. Getting monthly gap. Nothing on a weekly, daily. We had a daily gap. Looks good for higher. Yes, if I'm not confident in a setup, again, most people think about how they can catch more trades, and that's why they lose money. I think about how can I not take dumb losses. Majority of my dumb losses come from trading more assets. They come from zooming in more. They come from being impatient, right? If you can remove all that, and again, just take quality setups, win or loss, continue and repeatedly do that, then you're in a good spot. So intermarket analysis is just DXY, go down from here, up from here, about this level. But if one isn't ready, then we should wait. Yes, that's how I do it. If I want both assets to be, it doesn't have to be perfect, right? But I want both assets to be at points of interest at the same time that would make sense for an expansion to form. Yeah, no problem. I don't trade 4-hour key levels, Jen, but if you're a more intraday trader, you can. For sure. Yes, if I'm bullish, this is what people don't make sense, right? If I inevitably think price is going to go up here, and let's say price is right here, why would I trade anything but where I expect it to go? It doesn't make sense, right? That's just impatience, right? If I'm bullish, I'm trading bullish setups. If I'm bearish, I'm trading bearish setups. Point blank, right? That's it. I'm not trading bearish into the bullish or bullish into... No. If I expect price to go higher, I'm trading it to go higher, right? Not vice versa. Again, that's where all the dumb setups and dumb losses form. When you say targets, do you mean daily and higher swing points? Targets are either opposing liquidity pools or opposing key levels that you could be wrong at, right? Like if I'm bullish, I can maybe take a partial or close my position at an opposing bearish daily order block, right? You know, something along those lines. You want a partial where you could be wrong, or simply where we could form retracements, which would be opposing liquidity. Yeah, no problem. Do you consider rejection blocks as highs and lows, like what Romeo talks about? I consider rejection blocks a key level that, if validated by intermarket analysis and bias, I can trade. Simple as that. The more you overcomplicate stuff, the more it's going to be difficult to repeat it. You just got to keep it simple. All right. Is a high probability shift in order flow also based on the high time frame? Well, it has to be from an area that you expect an expansion to form, or else it's just a pattern. I mean, look at this. How many market structure shifts do you see in here? How many of them failed? Exactly. That's why the high time frame is a requirement for me. It's not a confluence, it's a requirement. You find it easier to do intermarket analysis on Forex rather than indices because they can get pretty decent pretty hard? Yes and no. I think indices still works very well. You just have to understand what each indice, how is it delivering, what is its bias, right? Because if NASDAQ and S&P are bullish, but YM takes a high and rejects it, well then NASDAQ and SPX could possibly have a retracement reversal, right? You know, stuff like that. It's just a lot more indices. There's a lot more you have to watch for, because there's a lot more SMT. Because again, it's multiple assets all in conjunction with one another. That thing you marked as breaker on DXY is confusing. Why? What's confusing? This? Well, low, high, lower, low. If closed below. It's also an order block. Same thing. Order blocks are breakers on a lower time frame. Yes, it does. It's not a breaker yet. You take the wick when the wick is long. You take the body when the body's big. Hence why I'm using the wick. It's not 50-50, it's logic. Wick when it's long, body when it's not. If you say looking to catch expansions in daily key levels, are you trying to refine the daily order block in the low time frame? No. I mean, you can to an extent, but I find the more you try to be perfect. Again, you can't expect perfection in an imperfect market. So you just have to have a decent entry and a better stop loss. That's kind of the model I roll with. I don't need the picture perfect entry. I need a decent entry and a perfect stop loss. And I can consistently catch high RR trades. Say we close below, but in the process we take the low and look back in. Yes, that would be an instance in which I would monitor it, Brick. But I would also be very cautious of, okay, we met a target, this target's rejecting, we could possibly be in a retracement here. And then that may be a point in price in which, if we do have a setup, I wouldn't take a turtle soup and I'd wait to see further information. All right, maybe we get a 15-minute shift and a pullback, then I'd take an entry, right? Or maybe it just gets ran, and then I don't take an entry at all. I'm bearish on DXY. Okay. Bias doesn't change with this. I'm bearish, right? It's just how are we going to print bearishly is what I'm asking. That's what I'm focused on. All right. But that'll probably wrap it up today. I'm going to end this recording here.